If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everybody? My name's Obi, and welcome back to the Courtside Financial Podcast, the podcast where we talk about business and technology, spend a lot of time focusing on the EV industry in China with a special focus on my favorite company, NIO. I'm an investor, I'm an enthusiast, but that doesn't mean that you have to be one too. Get to do your own research and come to your own conclusions. Anyways, we're going to be focusing on pretty much the macro today, a lot of things going on, and probably making some comments as well, again, on NIO's recent situation with their earnings. We're going to be talking about XPENG a little bit, Li Auto, going to be, and a little bit of Anvo, of course. It seems like we can't get away from that topic these days. So it's going to be a super interesting, super insightful video. If you're new to the channel, just make sure you hit the like button, make sure you hit the subscribe button, click the notification icon, and leave a comment down below. I cannot stress this enough, but your engagement really does go a long way in helping out the channel, helping out these videos to reach a broader audience. And so without further ado, let's get started. So let me paint a picture of what's going on in the EV industry right now. Deutsche Bank just dropped some massive predictions about NIO, and the numbers are staggering. But before I get into that, let me explain why it's significant. We've got a fascinating situation where major players like NIO, XPENG, and Li Auto are basically playing completely different game. Li Auto's out here collecting profits for 8 quarters straight. XPENG promises to break even by next year. And then there's NIO. Let's talk about numbers first. Deutsche Bank is forecasting that by 2025, the NIO brand itself will push 223,000 units. Their sub-brand Anvo, previously known as Alps to some of you if you've been away for a while before it was unveiled, will push 219,000 units. And their mysterious new and up and coming brand Firefly will push 8,000 units. Here's where it gets a little wild though. Truthfully, I try to speak on things objectively. NIO is playing this game like they've got unlimited lives. The truth is that they've burned through 20 billion yuan in just 4 quarters. That's not a typo, folks. Their operating losses have topped 5 billion yuan for 4 consecutive quarters. Now, a lot of companies would be in panic mode, but NIO seems to be cool as a cucumber. So let's talk about what's actually happening on the ground. NIO just hit a record with 61,855 vehicles delivered in Q3, and this is crucial. Their sales expenses shot up to 4.1 billion yuan. That's about 200 million more than most analysts had expected. Why? Because they're building a massive network for their new brand Anvo. Speaking of Anvo, this is where things get really interesting. They've got 190 stores right now, and they plan on having 300 up by year's end. Their first car, the L60, is apparently selling so well that they're booked up through Q1 next year. Their president, Alan Ai, is out here making bold claims too about hitting 20,000 deliveries by March 2025. But here's the drama, and this is something that you won't hear anywhere else. About 50 to 60% of Anvo customers are backing out because they can't get their cars before the government subsidies expire. We're talking 1 to 2 million yuan in lost subsidies per customer. That's a big deal for buyers in the 200,000 yuan price range. Now let's put this into perspective. October deliveries across the entire industry are wild. Li Auto, 30,000 plus. Leapmotor, 30,000 plus. Zeekr, XPENG, Xiaomi, all hitting 20,000 plus. NIO, they managed 20,976, but here's the kicker: only 4,319 of those were Anvos. It appears that their main brand is actually declining in what is supposed to be peak season. But NIO's founder and CEO Li Bin isn't sweating because he's obviously got something up his sleeve. There's the Middle East play. They just signed with Green Car in Azerbaijan. They're also launching in the UAE, and they're building out an advanced R&D center in Abu Dhabi. They've also even created a whole new department called Global Business Development. There's a 3-brand strategy. NIO obviously hitting the high-end premium market, Anvo supporting the family with 2 new SUVs coming next year, and Firefly, their Mini Cooper competitor, which is going to be taking deliveries in the first half of next year. And there's the platform play. They're switching out their main brand to their next generation platform, starting with the ET9 sedan. Now let's talk about their competitor XPENG for a second, because the contrast is very different. XPENG's clearly playing a completely different game. They're moving units with their cheaper Mona M03, but check this out. Their average car price dropped from 254,000 yuan to 189,000 yuan, and that was just in 6 months. But here's where XPeng gets clever. They're making bank selling their technology to Volkswagen. Their service revenue hit 1.3, or services revenue, I should say, hit 1.3 billion yuan, up 90.7% year over year. It's a whopping 60.1%. So where is all this heading? NIO's betting everything on 2026 profitability. They've got this major cash injection from Abu Dhabi, 3.3 billion plus another 3.3 billion from state-owned shareholders. Li Bin's expecting the gross margin on their main brand to hit 15% by Q4 2024 and 20% by 2025. So here's my take. NIO's either making the biggest bet in EV history, or they're seeing something that we're all missing. They're spending like a tech company, but they're building cars like a luxury brand. It's like they're trying to be Tesla, Toyota, and Mercedes all at once. And I'm not saying this is a bad thing, because I actually like the multi-brand strategy, and I think that can give them a lot of scale. There's just a lot of cash burn to be associated with that, which is the risk. And we have to understand that we can't look at things through the rose-colored lenses all the time. There are risks associated with the decisions that these companies make, and I think as an investor you would want to know that, and you would want to acknowledge that. The real question isn't whether NIO can sell cars or not. They've proven that they can. The question is, will the massive cash burn pay off before the money runs out? Are they the Netflix of EVs, burning cash to build a future empire, or are they WeWork with batteries? That's all for today's take on NIO's high stakes game. If you're investing in EVs at all, even if you're not a NIO investor, you need to watch these stories like a hawk. This is Obi, once again reminding you that sometimes the biggest risk give the potential for the biggest reward, but at the end of the day there's still risk. So stay sharp. Make sure you're doing your due diligence when you're investing. If you found this video informative, insightful, at the very least entertaining, engage with it, leave a comment down below, hit the like button, click the notification bell icon, and we'll see you in the next episode. Thanks for tuning in. Bye.